Okay. Okay, thank you, everyone. I might just ask everyone to take a seat in that section. We'll start about now. So welcome, everyone. Thank you so much for making time to come in today. I'd like to start with an acknowledgement of country. State Library Victoria acknowledges the traditional lands of all the Victorian Aboriginal clans and their cultural practices and knowledge systems. We recognise that our collections hold traditional cultural knowledge belonging to Indigenous communities in Victoria and around the country. We support communities to protect the integrity of this information gathered from their ancestors in the colonial period. We pay our respects to the elders past and present who have handed down these systems of practice to each new generation for millennia. Quick community announcements. So on the 21st of August, we've got the members' lunch and learn, and that's Startup Finance, Build Smart from the start. It's about setting your finances up from the get-go before you get to a place where your finances and systems are jumbled up or set up for potential failure. So we've got some QR codes present on there at the entrance of StartSpace, and we'll put a QR code holding slide at the end of the presentations today. This lunch and learn session will be with Raymond Guy. Raymond will break down how to manage cash flow with confidence, the cash cycle, understanding inflow, outflow, and timing, common tax traps to avoid early on, the basics of forecasting, simple systems, metrics, and tools to stay financially on track. And then for next month, we've got the next members' breakfast in September is about personal leadership and productivity joy with organizational psychologist and author Simi Rayat. You can use the same link for this members' breakfast to sign up for the upcoming members' breakfast. We also would like to announce that Lisa Ring Scholarships will be opening up next week, which is very exciting. With Lisa Ring Scholarships, you get financial support and you get mentoring support for your startup or business. So keep an eye out. We'll be sending more details in newsletters, on Slack, and through our different channels. I know we're running just a bit over time, but I'd love to just throw the mic to our members to do our usual member plugins. So any members that would like to announce anything, share any thoughts, share feedback, any successes, any challenges. Safi. You're welcome to come up, or you can also stay seated. We just want to hear your thoughts.
All today. Some of you know me and some of you don't. My name is Safi. And I myself have been part of this library for the past few years, and I have created and exited few startups during the past few years. So sort of I'm familiar with how to create businesses, how to create startups and stuff. And I'm happy to announce today that there's something that I was working on, me and like a couple of other people working on during the past probably more than 8 months. And it's a new accelerator program that sort of we are right now taking applications for. And like I myself have been to so many accelerator programs, incubator programs in Australia and around the world for when I was working on my startups. So basically in this program, we are trying to like teach hands-on skills to entrepreneurs about like how to build something and scale it, and also all the way into generating revenue. We are offering up to like $100,000 in investment for the startups that are coming successfully out of the program, and also investments directly from us and from our partners, and also like other VCs and angel investors in Australia and also around the world. So please feel free to spread the word or apply for the program. I just leave this here. You can scan the QR code. And yeah, hopefully the program starts at the end of the September for 3 months, 12 weeks. And yeah, please, if you want to go to the next step for your startup, apply to the program. And if you have any question, I'll be around. Thank you very much.
Awesome. Thank you, Safi. Yeah, please have a word with Safi if you're interested. Next member. Any announcements, challenges, thoughts, stories you'd like to share? Come on, I need at least 2 more hands up. Sorry? Is that all?
You have to pass the mic around everyone.
I don't. I'll stop.
Oh,
with
yeah.
you. There you go.
Yeah. Hi, my name is Hari. I do AI-powered immigration assistance. So it's pretty much a new modern system where people just come in, fill in the documents, and it'll kind of guide you with everything. And it kind of avoids and saves a lot of time, hassle, and everything. So this is actually new. So pushing a new product which has not been done, and people started imagining stuff. How is this different from ChatGPT? Which I always get the basic questions, so it's a bit hard. But pushing a new product that people haven't seen it is really hard. If there is something that anyone can share, how you guys pushed a new product that has not been out in the market or people can't imagine, I would love to hear from you later. Thank you.
Thank you, Hari. That's great. Thanks. Can we give Hari also a round of applause? Thank you. Yep. Would anyone like to respond to this or share anything else? Yep. Shahina?
I just want to say, build up on what Hari said, because I think I'm in similar space. I've got coaching into an industry where it's not happening, and I want to do it differently in a way that it works, but no one understands. They compare it with something that's already exists, and they're like, how it's different from what we already do, whereas what they're doing is not giving them results, so they may as well do it differently. But the challenge is it's new, and how do I show them the value? Maybe it's something that I need to learn, or maybe it's something that they need to change. I don't know what's that. But it's the same thing, new product, how to make people aware and see the value of that.
Thank you. Next person. Any other thoughts? Otherwise, we'll introduce our speakers for today. Any last thoughts? No? Okay, great. Well, let's jump into it. I would like to just very briefly introduce Luna. For anyone that doesn't know Luna also pitched in our Flip the Pitch event, which was awesome. Thank you. Luna offers forward-thinking legal and accounting services in one place. For over a decade, thousands of startups, venture capital funds, and corporations have chosen Luna to help them see a better tomorrow. So Josh is the head of startups, and Nash is the head of tax at Luna. I'll pass it on to you guys, but round of applause, please.
Hey everyone, thank you so much for your time this morning. It's wonderful to see you all here. I will say that the Flip the Pitch event was by far the most nerve-wracking event that I've ever done, because when you have blinding lights in your eyes and you have to pitch to an audience that you can't see is very confronting. So thanks guys for that beautiful experience earlier this year. Today we're talking about startup accounting, accounting 101. So we're going to be starting really at the very basics of what accounting is, and Nash is going to be leading the whole presentation. I would like to refer to myself as a supporting act here today, with Nash being the real brains and one of our most incredible team members at Luna. Let me turn this on. Awesome. So who are we? As Amir mentioned, we do legal and accounting for startups, scale-ups, and funds. We've been doing it for over 10 years for thousands of startups. What that looks like is, like, from day one on the accounting front, everything from how to understand your numbers to make better financial decisions, all the way through to strategic CFO support as you start to scale and move towards exit. And for legal, it's everything from setting up businesses, everything operational that you might need to grow, IP, trademarks. I heard some of the words as I was cruising through breakfast this morning, through to taking on investment and buying and selling at the very end. We have a team of experts. We call a lot of our team corporate refugees, coming over from top-tier talent to come work in the startup ecosystem, because it's exciting and we love what each of you are doing. So we're going to be covering Accounting 101, and we're going to be covering two very important areas. The first area being, like, understanding profit and loss. And the reason we start at understanding profit and loss is like, this is the foundation of our accounting house, and we're building solid bricks so that we can build a nice, tall, big, stable building. And understanding profit and loss is probably like the number one thing that you're going to see coming in and out of your business. And when you're using a software, which we'll cover as well, it's going to probably be one of the first things that you're looking at to understand your state of health. So we've been covering off on what profit and loss looks like and how to actually read a profit and loss so that you can understand the finances in your business. The second part is that we're just going to cover off on tax need-to-knows. As we go throughout this presentation, we would love for you to ask any question that comes to mind. It's much easier for us if you have a question in the moment, just like shout at us or raise your hand or whatever method that you want. And it will make a really engaging kind of discussion. But in any case, if you have no questions, we can always answer them at the end too. And invariably, when it comes to accounting and tax, there are complex questions, and we'll tell you we probably need to sit down and have a little bit more of a lengthy discussion. But in any case, whether you're a sole trader, whether you're a company, whether you're just starting or you're scaling, this is a great starting point to help you understand startup accounting. So where do you start with startup accounting, and what do we actually look for? So I think that there are like 4 key steps really to understanding like your finances in a lot of detail. We're not going to be covering all of these steps today, just the first little portion. But this is a little bit of a roadmap. So the first part to understanding startup accounting is understanding what's coming in and going out. That's easy. How am I making money and how am I spending my money? The second point here is like really looking at your business and starting to categorize where your revenue comes from, the money coming in, and categorizing how you spend your money. This helps you create efficiency because you can start to look at your expenses and start to say, this category we're spending too highly on, and this category we might be able to spend a little bit more on. And then finally, once you've got a little bit of an understanding of what's coming in and going out, you start to look at cash, because the profit and loss that you see, what comes in and what goes out, for a lot of people looks very different to what's in the bank account at the end of the month. And so for a lot of businesses, understanding the timing difference between when you receive cash and when it's actually reflected in your accounts is really, really, really important, and that's called cash flow. And then finally, once you have all these pieces in place, you can start to build a budget or a forecast to help you predict and start to measure what's going on in the future. But first, we're going to start at profit and loss. And I'm going to let Nash introduce herself and take us away.
Thank you, Josh, and thanks everyone for being here. It's so nice to see such a good turnout to talk about accounting on this lovely Thursday morning. My name is Nash, and I'm a chartered accountant and a registered tax agent. I've spent the last 10 years of my career in a mid-tier accounting firm, helping rich people get richer. So started, as Josh mentioned, I'm a corporate refugee, just needed to, like get involved with people like yourself, just change makers and pioneers. Anyway, today we're going to be talking about the one-on-one of accounting. So we'll start with the profit and loss. Firstly, as founders, you need to kind of understand how what your business model is. We generally put it into main buckets. Low-touch services and high-touch services. So low-touch services requires very minimal human interaction to service your clients, such as SaaS, e-commerce, marketplace, and the high-touch services are more like very much human-driven businesses, such as Luna is one of them. We get one-on-one consulting time with our clients, and you need a human to be able to do your accounting, and although AI is also taking over the space now. Anyway, All right, understanding your profit and loss. We're just gonna take a very high-level example here, which is Uber. Uber. This is not a sponsored slide deck, but so in the case of Uber, their main revenue stream would be trip fees. Although they do have like a subscription model now, which is just never mind. And expenses, driver payments, app hosting fees, marketing, wages, insurance, all the usual stuff. So revenue, what's coming in, expenses, what's going out, pretty simple. And then we break those down even further into direct costs and operating expenditure. So direct cost is the cost that is going to be increasing the more you serve, the more customers you serve. So with every increase in trip fees, you're gonna have more driver payments, you're gonna have more app hosting fees. And operating expenditure are the costs that you're gonna have to pay regardless whether you're serving one client or 10 million clients. So those are kind of like the fixed costs of running a business. So understanding the difference between direct cost and operating expenditure is important to know because it feeds into the building blocks of how your profit and loss statement looks like. So we've got the first line is typically the revenue line, which is what's going into your business, sales to customers, pretty straightforward, and direct cost is the cost to deliver those services. And what's left over now is the gross profit that you have. So these are the remainder of what's available for you to be able to use and supplement your operating expenses. So these are, we call it margin. So with the margin that it contributes to your overall operating costs. So, and then at the end, you have your net profit. Sorry. And then you've got your net profit, which then shows your overall health of the business as a whole. Any questions at this point? Concerns? Great. Sure. Because we use gross profit as a measurement because if you're making a loss to service a client, there's something that's not working in your business model as a whole. You're incurring more cost to service a particular client. So even though your revenue is growing, you're not really retaining any excess profit to be able to scale your business. Does that make sense? Thank you, Josh. All right, how do we come up with your bespoke profit and loss for your business? First, list out your revenue streams. You might have multiple revenue streams with multiple revenue recognition methods. There's the most straightforward one would be sale of goods and services. You bill your client and then you recognize it up front. And then there's also maybe a subscription model involved where you take annual subscription payment from a client and then you have to service a client for a whole 12 months. So depending on what your revenue model is, that will dictate how your revenue is recognized, whether upfront, over time, or once a certain performance obligation is dispatched. And then second step, list out your expenses. You're gonna be very familiar with what your business has to pay. You go through your bank statements would be the first step. Typically, the founders that we see, they're just like paying as the bills come in, not really keeping track of what's going out. And there's also sometimes we see a mesh of personal expenditures and also business expenditures coming out of the same bank account. So let's try to steer away from meshing those expenditures. List every supplier and then group those suppliers into different categories. So we've got the category of the marketing, consultants, or contractors, things that the business can do without in the first 12 months of operations. We've got maybe rent, we've got running costs, we've got salary and wages. So it'll be helpful to group those expenditures into the bucket. Otherwise, your profit and loss is gonna look very overblown with so many different expense lines. And then step 3 is think about future expenses. So you might take a revenue up front for a client that you're gonna be servicing over the next 3 months, and you haven't actually incurred your costs to service those clients. So do you take up those costs right now, or do you plan for it? Yeah. All right, so once we've made those decisions, the next step is tracking your expenses. The best way to do it is via an accounting software. Xero is a pretty good one. They've got tiered subscriptions. Again, not a sponsored event. But at the bare minimum, I always tell clients to at least have a business bank account. Never mix a personal bank account with a business expenditure. Either you're a sole trader or a company or a trust operating. Once you're starting a business, start a different bank account. If the bank account has no money, then you transfer in the money from your personal bank account and then pay out the business expenses through the business bank account. This makes it a whole lot easier for when you're 12 months down the line and you're trying to figure out how to do your taxes, and everything's all into one place if you don't have a accounting software.
Does anyone have any questions so far? No?
Cool.
Yeah.
Yeah, sure.
Oh, sorry. I think someone was asking. Just one second. Have the mic so everyone can hear you.
Thank you. With these steps, it seems like this is not a one-time activity. Is there a suggestion or a recommendation of how often this should be done?
Every time there's a significant change in your activities, it should be reviewed. So once you're starting a new revenue model, then maybe it's time to rethink your chart of accounts for profit and loss. But it really depends on what the levels of activities in your business are having currently. If it's not going to be changing all that much within 12 months, maybe an annual review would be great. If it's constantly changing and you're evolving very quickly, then maybe quarterly or monthly. Yeah.
Thank you.
One more question. That's all right.
Lovely. Just wondering if you could.
Sorry, I missed that.
Sorry, can you hear me now?
Yeah.
Awesome. Just wondering how expensive something like Xero may be, or other softwares like it.
Xero has a tiered subscription. I think at the most basic would be maybe $10 or $15 a month. But there's like partnerships that you can get further discounts on. I think if you take a license through Luna, there's a further discount that we can offer because we're a Xero partner.
There's also heaps of startup discounts floating around. You get 6 months free, but generally it starts at $15 and sometimes you pay up to $200 a month. That's in general not crazy.
Thank you. All right. So accounting software generally links up to your bank feed. So whatever that's going in and out of your bank account, at least we know that it's all being transferred to your accounting software. And an accounting software also helps in terms of invoicing. So when you're invoicing clients, and you can keep track of who's paying, who's not paying, who's overdue, and also when you're receiving invoices from your vendors, your suppliers, that's also an easy way to keep track of it. So it just, like, for a minimal amount, it just takes the admin burden out of yourselves and leaves you free to do everything else, scale the business. This is an example of a profit and loss statement. So we've got the top line, the trading income of the sales, and then we've got the cost of sales, which then contributes to the margin, which is your gross profit amount. And then the rest of it is just operating expenses. You see how we've got buckets like marketing, consulting, and also like wages and salaries. We're not gonna blow it out and be like, I'm paying Jenny 12 grand a month or something like that. We're not gonna put Jenny's name on this profit and loss. Great. Any questions, concerns about the profit and loss statement? Cool. All right, profit versus cash. So the profit and loss statement that I just showed you previously, that's what's on paper. That might not be reflected in the business bank account. Why is this? This is one of the biggest cash versus accruals conundrum that I come across in like a business sense. So profit, what's on paper, and cash, what's the actual reality money in your bank account. The difference comes around when there's a timing difference. Let's say you invoice a client today and they don't pay you in 3 months. That's when the difference comes in. Let's say you pay rent for the next 3 months, and then, but the expenditure is not reflected. If you run the profit and loss for a particular month, the expenditure is only gonna be reflected for that particular month. But the cash that has gone out is already for the 3 months. Does that make sense? Yeah, cool. Thank you. Right, everyone's favorite thing to talk about, taxes, which is also happen to be my domain of specialty, because I head up the tax team at Luna. These are the typical things that catch businesses off guard, because this isn't something that you think about on the daily. First thing being superannuation. If you've got employees, you're obliged to pay 12% of superannuation on top of their base salary. If you're also paying yourself salaries and wages, you're also legally obliged to pay yourself super on top of your base salary. So superannuation payments typically comes about every quarter, though there is the government is from 1st of July 2026, I think businesses are going to be obliged to pay super on the day that the pay run is made. And number 2, GST, which is reported and paid via your activity statements. So there are various lodgement cycles for GST. There's monthly if you're a big GST payer. The most common one would be quarterly. And there are some cases for an annual GST lodgement as well. So GST payments comes about a month or 2 after the quarter ends. So most of the time, founders have already forgotten what happened in the previous quarter, and then we send them like, oh, you need to pay this amount of GST, and I'm like, where did that come from? Like, I don't know. Insurance, another annual payment. So we've got, you guys are very familiar with this, business insurance. I'm not gonna touch too much about that. And payroll tax is another spicy one. So if a business incurs a lot of incurs wages up to a certain threshold, then you pay more taxes on top of that because you're employing a lot of people. This is an annual payment as well. The business will report if you hit $1 million of wages, then there's payroll tax to pay on top of that. Any questions on any of these? Cool. Yeah. Yeah. Just yell at me. Depends on, I don't think so. Yeah.
Test. Oh, it's working. Sorry, did you get this question?
Yeah.
Yeah, okay.
If payroll tax only kicks in after $1 million of wages paid annually. Yeah. Any other questions? All right. Moving on to company tax obligations. If you're structuring your business as a company, there's the typical company income tax returns to do, which is an annual obligation. Typically, if you're lodging the income tax return yourself, it's due 31 October. If you're lodging it via a tax agent or you ask for an extension, the ATO generally gives you an extension up until 15 May the following year. Though, however, if you're a large taxpayer, it's unlikely that you'll be granted that extension. PAYG withholding and PAYG installment. Those are two different things that people usually get confused about. PAYG withholding is the withholding tax that you're paying out of your employee's salary and wages. These payments must be made also quarterly via your activity statements, though if you're paying a lot of salary and wages, then you might be obliged to pay it monthly and lodge monthly activity statements. PAYG installment is the tax installment that you pay as you go for your company tax obligations. So let's say your company made a taxable income of 100 grand in the past year. You pay 25% tax of that. The ATO is going to be like, you're probably going to make the same amount of money this year. So let's pay those installments, pay those taxes in installments instead of at lump sum when you lodge your final tax return. And then there's also GST, which we've already covered, fringe benefits tax, which is also something that usually catch people off guard, is the tax on any benefit that you provide to employees. So if your employee is getting coffees or entertainment or movie tickets, those things might be additionally taxed as fringe benefits tax. Individual obligations is when you're running your business as a sole trader. So that's just your typical income tax return and your GST for every quarter.
I've got a quick question on that from the questions that were submitted.
Oh,
sorry, that were submitted while members registered. But what are the key factors that contribute great value when managing finances as a sole trader?
Yeah. So great value is getting everything organized upfront. You don't want to be caught in a situation where you've already got 1 million transactions to reconcile, but you have 2 days to lodge your tax return. That's when people get caught off guard. And also cash flow provisioning is important when you're running a business bootstrapped. You want to forecast as early on as possible what your outflows are going to be and whether you can, and where the funds are going to be. And also debtors management, where collecting payments from clients. If you've got clients that aren't paying, it doesn't really matter whether you're making a sale or not. Like, if they're not paying, then it's not good for the business. Cool. Sorry, was that the question? Yeah. Okay.
Just thank you.
Thanks. So these are the key dates for tax lodgements. There's obviously going to be exceptions to the cases, but these are typically the dates that you're going to be looking at for a tax obligation. So, question time. I think we've gone through the questions as we go.
Amazing. Thank you. So we'll take audience questions now. I've got a couple of questions, but I might throw it to you guys. Yeah.
One of the questions, but in terms of setting up a company,
Yep.
I feel like, sorry, not really working. A bit of a dilemma in terms of, do you own shares yourself or should you set it up through, say, a trust?
Okay, great question and a very common. So the question is, when you're setting up a company, whether to own the shares in the company via a trust or in your own personal name. So always the go-to recommendation from me would be to own it via a trust, just because of asset protection reasons, and also it's just better if you're seeking funding from VCs or anything. That's what they're going to be looking at. And also the second thing is, if you own the shares in your personal name now and then transfer it onto the trust later on, let's say the business has already made $1 million in revenue. You're going to have to cop the capital gains tax of transferring the shares from your personal name to the trust, because it's going to be seen as you're selling the shares to the trust, even though you're the owner of the trust, beneficiary, trustee, and all that. Is that?
Other questions? Yep, Ali.
So I've got a small revenue, and when is the right time to have an accounting software like Xero?
The right time to have an accounting software is when your transactions have gotten, the volume of transactions that you have is getting too much for you to manage manually. So if on a day-to-day basis, you're spending an hour reconciling maybe 50 transactions, I would probably recommend getting an accounting software. If it's 2 transactions every week, probably not worth the investment at this point.
Cool. Thank you.
Good question. Thank you. Other questions, please? Thoughts? Yep, Aaron.
Thanks for the presentation. It's really informative. Just a question, if you do have a trust company, is that a separate company structure per se? So do you still go as a sole trader, or do you actually become a trust as a different sort of model structure?
Yeah. So the typical structure that we usually see is business running out of a company, and then the trust owns the shares in that company. So depending on what your business is, if you're a purely consulting service, and depending also on what liabilities you're taking on, because as a sole trader, you're taking on all of the liability. There's no separation between yourself and the business. So if you're taking on like big contracts or anything like that, best to do it out of a company. In reference to your question about structuring, so if the business is already running out of the company, then the company is the business. So you take your personal self out of it. You're a separate entity. You'll have to lodge different tax returns for the company and yourself. You can be an employee of the company. You can be a contractor of the company if you're still involved with the operations. Yeah, does that answer your question? Yeah, sure.
About not-for-profits. Just a question about not-for-profits. Is that handled through ATSIC, or is that a different organisation? And how do you deal with it in terms of how you structure it?
Yeah, so not-for-profit is governed by ACNC, so the Australian Charities Commission. So there are a few different reporting obligations that you're going to have to do. You, as a not-for-profit, you maybe have to lodge a tax return depending on what your charitable activities are, if you're tax exempt or not. So those are like different categorization. You can be a not-for-profit and not be tax exempt, if that makes sense. So that's the general, as general as I can get with that question. Thank you.
Thank you. I've got a question again from registration. So someone said, with tax obligations, what are the tax obligations of buying assets as a business? If anyone asks this question that's in the room, you're welcome to provide a bit more context, but if that makes sense, yeah, what are the tax obligations of buying assets as a business?
Buying assets as a business, as in like the business is buying investments. So in general, when you're acquiring an asset, it's not a taxable event if you're the buyer. It's only a taxable event when you're the seller. So is it like an investment property? Is it just shares? Is it a plant and equipment? So those are going to be traded differently in terms of taxes, whether you get a tax benefit of the asset depreciation or not. But if it's just an investment, let's say an investment in shares, you can buy it without any like serious tax obligation unless you're starting to receive dividends from your acquisition and anything like that.
We'll take one more question. Any questions? Yeah, we've got two. Might go with you now.
You sort of touched on this already in terms of, so the whole buying shares of a company. So this is like, if it's a private, not publicly listed company, you've got shares within the company, you're buying shares from someone else. Are you sort of saying that there's, from a tax perspective, you pay tax if you sell the shares, but not if you buy the shares? Is that right?
Yeah, that's right. And there's also so many like capital gains rollovers and exemptions that is available for to access when I'm talking about now restructuring kind of deal. But at the most basic, yes, if you're selling something, you're gonna pay tax on the gains, whether it's the full amount, the tax for the full amount, or whether it's discounted to 50%. That's a different story.
Great, thank you. Since you raised your hands together, I might just give it one actual last question. Yep.
Thank you. Sorry, I know I've got a lot of questions.
Oh, good.
I'm just curious if you could tell us a little bit more about the business activity statement. So as someone who hasn't really properly looked into it and I know I need to, what should I know? Where should I look?
Okay. So if your business is registered for GST, you're going to have to lodge a business activity statement. Are you asking more about like the admin side of thing, or what's meant to be on it?
Or maybe like the first question then is, how much do you have to be getting in revenue to need to pay GST? And only if you need to pay GST, is that only when you do the business activity statement?
Yeah.
Okay.
So If your business turnover, I think the threshold now is 75 grand. So if your turnover is hitting 75 grand, then you're legally required to register for GST. You can do voluntary registration before you reach the turnover threshold if you want. But once the registration kicks in, you're going to have to report how much GST that you're charging and collecting during the quarter. And then once you lodge the activity statement, that's when you actually pay the GST to the tax office.
And that's 75,000 annual returns?
Yeah, that's
Yep, great.
annual turnover.
Yeah. Awesome. Thank you. Please give it up to Josh
Thank you
and
very
Nash.
much.
So we'll wrap this session up.